To watch these important lessons, subscribe to DP Education's YouTube channel right now. Click on the bell icon to stay updated on the latest lessons. Sri Lanka's largest free online school, DP Education.
Hello everybody. Hello guys. This is the 2016 paper. Still, we are in the 2016 paper, but the second part of the paper. This is the accounting part. Right. This is what we have. No. Here we go. This is what we have today. The part 2, accounting part of 2016 Western Province paper. Let's write it down here. Let's write it down on top. This is the paper, Western Province, third term. Yeah, 1, 2, 3, third term paper, paper 2, third term, second paper 2. Okay. Paper 2. Here we go. Question number 5. As we all know, there are 3 questions and you have to choose only 2. This is the 5th question. 5th question. And let's go with it. 5th question, Roman number 1. Explain briefly accounting. Now, ask us something that we don't know. We all know what is accounting is, right? Yes. Okay. Tell me the definition. I will write. Tell me. Accounting is what? No. Not recording transactions in accounts. No way. No. Not recording No, not preparing statements, financial. No. No way. What is accounting? That's right. It's the part of providing information, the financial information for the decision makers. All right. Not the recording part, recording transactions part. No. Accounting is not the recording part. It's the, that's right. Providing part. Providing what? Providing food. Providing the financial information. Providing the required information. Providing financial information to the stakeholders, for what? For decision making. For decision making. Got it? That's accounting. Providing financial information of a business to the stakeholders, stakeholders. for decision making, for their decision making. That's accounting. Do not write recording transactions in accounts and preparing income statement and finding the calculating profit and blah blah blah. It doesn't matter what you write, you will not get marks. Remember this. This is the proper definition of accounting, and this is what you should write in your paper for accounting. B, write 2 characteristics that can be observed of a liability. They're asking about liabilities. We can write about liabilities and write some valid points. Don't write rubbish. I have seen several times some children in their school exams, term tests, they have written liabilities are dangerous. Can you write that? Tell me, can you write that as an answer? Liabilities are dangerous. What is it like? Is it a deadly chemical? Liabilities? Dangerous. Okay, now I'm not insulting anyone, okay? It's okay. You can say liabilities are dangerous, but not as a characteristic. And liabilities are dangerous. Don't use those words. Use business professional terms like liabilities are risks. Okay. Yeah, you can say that. Liabilities are risks for a business. Obligation. Use those words. Right? Liabilities are dangerous. It's like, you talk about it like you're talking about a deadly chemical or something. Dangerous. Characteristics that can be observed of a liability. Liabilities are obligations. Liabilities are obligations. 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 Current obligations. Okay. A company. No, don't write anything else. Keep it short. Current obligations. I will write that. Current obligations. Current. What I mean by current? At the moment, at present, they are currently obligations. You know what it means, right? And you can read my writings, can't you? current. Now is it clear? Current. Current obligations. Another characteristic. Liabilities result at the end of a liability. It should be paid back, no? Isn't it? It is. It is. It should be paid back. So, when settling means children paying back, okay? When settling liabilities, resources, what happens to resources of the business? Resources like cash. Resources outflow. A resource outflow. A resource outflow. Yeah? Is it clear to you? when settling a resource outflow occurs. Resources like cash, you have to pay back. So cash outflow, resource outflow occurs when settling. A resource outflow occurs. That's it. If you want, you can write more. I can give you more. Do you want more? Tell me. Tell me if you want more. I can give. Another characteristic is liabilities are a result of liabilities are generated from past transactions. Liabilities are generated from past transactions. Next question. Following shows the effect on the accounting equation due to the transactions occurred during the month of March. During the month of March. Samira's business. This Samira guy is the owner. Huh? Samira. Kasun Samira. Whoever the Samira is, we don't care about the owner. The business is important to us. Okay. Now, transactions occurred during the month of March. Transactions occurred during the month of March. Right? We have 1, 2, 3, 1, 2, 3, 4. 4 transactions. Got it? What are we required to do? What should we do? Required part. State the assumed transactions. State the assumed. Okay. What are they asking? State the assumed transactions. You have to guess the transactions which has happened, which has taken place on these 4 days. You have to guess the transactions. Write the transactions in words. No. No. What are you thinking? You have to write your own transactions by looking at the equation on each day. Okay? You can't memorize these things. You have to form. You have to form an answer now. You have to form an answer. You have to be, you have to be a little familiar with the equation, accounting equation. This is the accounting equation. Where's the accounting equation now? This is the accounting equation. See, you have to be familiar with this. Otherwise, you can't do this type of a question. Yeah, of course. Assets equals equity plus liabilities. Now, I can't teach you the accounting equation now. Let's write the transactions. Transaction on 3rd. Now, we are writing the transaction on 1st, 3rd. This one. Assets 500,000 increased. Equity 500,000 increased. Nothing in liabilities. Guess. Nothing in liabilities. Guess. Easy, right? Owner has brought in 500,000 in cash as capital. Simple, right? Owner has brought in, owner has invested. Use professional terms. bring, owner gave. Don't write those type of words. Use good words, professional, business terms. Owner has invested. Invested. See, invested. I'm not writing the word. I'm erasing the word. Invested. Now can you see? Invested. Good. 500,000 as capital. Okay. Next. Third. Third March. Month of March now. I'm always concerned about this handwriting and small stuff. Don't worry. It's a habit. You know what? It's a good habit. So you don't worry, because I even don't worry about it. It's a good habit. Everything should be neat and tidy. Make sure that even in your paper, when you produce your answers, when you provide the answers, keep it neat and tidy. Neat, clean and tidy. Third, this is the second transaction. Third, this one. 200,000. No, 20,000. 20,000 increased under assets. 20,000 increased under liabilities. Can you see this? Can you see this? Liabilities. Nothing under equity. A liability has been obtained for the business. Most probably, it can be a bank loan. Bank loan 20,000 taken. Obtained a bank loan 20,000. That's why liabilities have increased. Or it can be a stock of goods even. Bought a stock of goods. Goods come into the business. So stock, inventory asset increases. Different names: stock, inventory, goods. All three names are used for the same. Stock, a new stock, or an inventory has been brought to the business on credit. On credit means liability increase. But we'll write the first option. No, I'll take the first option. First option is what? Obtained a bank loan. Bank loan rupees 20,000. Or you can write the other. No problem, even if you write something like this. Purchased or bought a stock on credit for 20,000. Even that one also correct. You understand what I'm saying? 20,000 assets increase, 20,000 liabilities increase. So you have many options. You can take any option that you want. Next, third transaction is this. 5,000 assets increase, 5,000 equity. Come on, man. Yeah, easy ones, right? I'm liking it. If you know, I like it if questions are difficult. Then only it becomes a challenge for you, right? If it's easy for you, there's no challenge. These are easy, right? 5th March. 5,000 assets increase, 5,000 equity increase. You can take any option. First option, owner invested additional capital 5,000 in cash. Owner invested a motor vehicle or a machine or whatever an asset to the business worth of 5,000. Income received, an income was received for the business. You can take any option. I'll take the second option. An income of rupees 5,000 received maybe a rent income, maybe a interest income, whatever the income, doesn't matter. Even you can write the first transaction, the first option. Oh, that is also correct. Owner invested cash or any other asset worth of 5,000 as capital. Last one, this one. 12th. Can you see this? Is it like far away and not clear? Let's put this up a little bit. Now okay. 12th March. This is 12th March, the last one. 3,000 assets decrease. 3,000 liability decrease. Nothing under equity. Assets decrease means we have paid cash, so the cash asset has gone down. Cash asset has gone down and the liability is also gone down. This side, let's say cash gone down, this side liabilities gone down. Both gone down. 3,000. That means cash paid to settle a liability. Okay, you can write paid a part of the bank loan, because we wrote bank loan story right here. We wrote for the third transaction, March 3rd. For this transaction, we wrote obtained a bank loan, see, of 20,000. Now this can be the last one. 12th March can be, this one can be paying 3,000 out of the bank loan to settle. Paid rupees 3,000 for the bank loan. Got it? Yeah, that's it. There are other options. You can even write paid 3,000 to trade creditors. Paid 3,000 for suppliers, the creditors for goods. Right? Settled money, rupees 3,000 to a trade creditor. That is also, those are also okay. Now this is the second part. Yeah, second part. Let's go and see what's next. This is next. Oh, this is next. What do they say about this? Following balances related to Sudhira's business as at 1st January 2016. Following balances related to Sudhira's business as at 1st January, beginning of the year. Okay, debtors balance debit 50,000. There is a debtor, there are debtors. Okay, we call them trade receivables. Trade receivables. That means the people who owe us, they have to pay us money, debtors. Okay. Cash balance is also debit, 10,000. Cash at hand. What are they telling? What are they saying now? 5th January, cash received from debtors 20,000. Discount deducted 1,000. 8th January, discount of 5% deducted when receiving cash. 10,000 receivable from debtors. Both transactions are about debtors. Debtors paying us money. Okay. What should be done? What should be done? The required part. Record the above transactions in a cash book. Cash book. Simple cash book. Above transactions should be recorded in a cash book. Okay. Cash book. And relevant ledger accounts too. Balance them off. Use the correct format. This is important. Use the correct format. Use the correct format of the cash book. That means you can't draw T format. Don't draw a T format. Okay? There we go. Let's draw the cash book. The correct format is required. What I do is, when drawing the cash book, I first draw the T format. T format. T format. Then I draw the columns to complete the cash book. The correct format. See, correct format. Correct format. They ask for the correct format. Now I draw the columns. Date column. Description column. Ledger folio, it's not really necessary, okay. This is discount column, this is amount column. Again, credit side, date column. Description column. This is discount column and this is the amount column. Done. This is the center line, the line in the center. Okay. Cash book. Cash book. Okay, done. Name the columns. Discount allowed. Rupees in date details. This side, credit side, discount received and rupees. Okie dokie, this is the credit side and this is the debit side. Done. Done. Now, what should we do? First, record the balances. There should be a balance, cash balance, if the business is, a continued business. This business is a continued business. Continued business means a business which has been, operating for a long time. It's not a newly started business. That's what I'm saying. Following balances related to Sudhira's business as at 1st January. See, 1st January balances are given now. 1st January balances are given. 1st January, see? These are the balances. Let's record them. Remember, you must record the balances before you start a cash book. Right. Debtors balance is given debit 50,000. That means for debtors, we must draw one separate account. For debtors, we must draw one separate account. Okay. Okay. This is the debtors account. I'm not going to draw the columns, children. You must draw the columns in the T accounts, in the ledger accounts. Debtors account. See, use the correct format of cash book. They have mentioned it, but they haven't mentioned to draw the correct format of ledger accounts. But if you draw the correct format, I advise you that is better. I'm not going to draw the correct format, means the columns, because space problem, and I'm going to make it quick. Now, debtors balance debit 50,000. That is on 1st of January. So in the debtors account, debit side, put the date 1st January 2016. Debtors balance means balance brought forward 50,000. There you go. That is debtors balance. Then cash balance. This is recorded. Tick it. Then take the cash balance. Debit 10,000. Debit side 1st January. 1st January, right? Balance brought forward. Not discounts allowed column. Record the balance in the cash column. 10,000. Okay. This is also done. Transactions. 5th January. Cash received from debtors 20,000. Discount deducted 1,000. 5th January. Cash received. Received means debit. We are getting cash to the business. Cash in, debit. From debtors. So description debtors. 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 How much is received? 5th. How much is cash received from debtors? 20,000. 20,000 is received. If you are having this type of a transaction, guys, received means received. 20,000 is received. Don't go and deduct the discount from 20,000. 20,000 is received. They say it is received. Then you put 20,000 here. Received, no? And the discount is already deducted. That is 1,000. That is in the discount column. See? 1,000 and 20,000 both recorded. Yeah, I entered. Both entered. That's how you enter. But the second, this one, 8th January transaction, discount of 5% deducted when receiving cash. When receiving cash, see the way they have given it. Discount. See the difference of transactions. Discount of 5%. Okay. Deducted. Deducted. Now already deducted 5%. Out of how much? When receiving cash of 10,000. Receivable amount is 10,000. Not yet received. In the above transaction, cash was already received. 20,000. But here, 10,000 receivable from debtors. Now you must deduct the discount from the debtors value, receivable value. Now you must deduct. Which means take the 5%, 5 over 100. Take the 10,000 receivable from debtors, 10,000. 10,000 into 5 over 100. Answer is 500. Do your calculations and see. 500 must be deducted or subtracted from how much? From this 10,000. Got it, 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 got it. Now what becomes 10,000 becomes 9,500 because 500 is subtracted, and that 500, this 500 is the discount. It goes to the discount column, just like that, just like that. Okay, again, description is debtors. You must have all these information to get the marks. Okay, don't forget the date, 8th first, 8th first. Debtors, discount you recorded, and the value after deducting the discount. Got it, 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 got it. Okay, that's it. Balance it. Balance it. Easy peasy lemon squeeze. Balance it. Balance it. Huh? Shall we? Now it's done. Finished. Okay. Now you say that it's finished. Right. What about the ledger accounts? You forgot the ledger. I forgot. Okay, I forgot the ledger. I forgot the ledger accounts to see whether you remember. Did you remember this? The ledger account? Something, a mistake that commonly people guys do. You guys do this mistake commonly. You forget the ledger account. When you record the transactions, when you enter the entries in the cash book, put the double entries to the ledger accounts. Right. So debtors debited in cash book 1,000 with a 1,000 discount, 20,000 in the debit side of the cash book. Okay, debtors debited. I mean, in the cash book, debited as debtors. It goes to the credit side of the debtors account. Again, in the cash book, debited as debtors. Debtors, see? Debited as debtors, see? Again, in the cash book, debited. In the debit side of the cash book. Again, as debtors. That also goes to the debit side of the debtors account. Got it? Got it, got it, got it, got it, got it, got it, got it. Got it. Okay. Now let's put these things are explained like crystal clear in the double entry dual impact of transactions in that lesson. It's already in the DP YouTube. Okay, the double entry dual impact of transactions, grade 10 lesson. I'm doing it. Go and refer to the lesson. Okay. Okay. So I'm gonna take off these ugly arrows, and I'm gonna put the amounts onto the credit side. Cash 20,000. Discount allowed 1,000. This is done. Next, cash 9,500, discount allowed 500. Cash 9,500, discount allowed 500. Okay, these entries now entered to the ledger accounts. Don't forget the dates. This is 5th, 1st, and the next one is 8th, 8th, 1st. Okay, done. Now you can balance. Is it clear now? Now is it clear? Yes, sir. It's clear. Done. Done. On the debit side, cash column, 10,000 is the balance. 10 plus 20, 30, 30 plus 9,000, 39,500. In the discount allowed column, take the total and mention it here, 1,500. In the addition box or the sum box, total box. Now, take the higher total or the greater total onto the other side. Nothing to subtract on the credit side. So the balance becomes the same. Balance carried down becomes the same, 39,500. Okay. Nothing in the discount received column. Nothing. You don't balance the discount columns. Just put the total in the discount column. Now, is it done? Is it done? Why you have to balance the debtors account also, right? Yes or no? Balance them, see? Cash book and relevant ledger accounts and balance them off. Wait. Before balancing that one and finish off the question, wait. There's another ledger account. That is the discount account. You didn't draw the discount accounts. Did you? No, you didn't. You didn't draw the discount accounts. You must draw the discount accounts. In this case, in this question, only discount allowed because nothing in the discount received column. Nothing. So the discount account must be drawn. Yeah. Discount account. Let's draw a T account for that. Like this, discount account. Discount allowed. Account. Into the discount allowed account, put the total of discount allowed column, 1,500. Into the debit side, because it's an expense. Discount allowed is an expense. Debtors is the description. Okay. Don't forget the date. Date is 31st. The last date of the month. 31st March. Oh, come on. Okay. I'm trying to extend that line. Now, 31st of March, debtors 1,500 in the discount allowed column. And in the debtors account, let's take the balance. Done. Take the balance. 50,000 on this side. That is the higher side. Debit side is the higher side. Yeah. Debit side is the higher total. 50,000. 50,000 on the credit side also. And take the balance. From 50,000 you must subtract the total of the credit side. 20,000 plus 9,500. 30,000, 30,000, 31,000. From 50,000 you have to subtract 31,000. 31,000. 50,000 subtract by 31,000. Tell me, how much is the answer? 31,000. 31,000. See, 20,000 plus 1,000. 21. Here, 9,500 plus 500. 10,000. 21 plus 10, 31. 19,000. Balance carried down in the debtors account. Balanced. Cash book also balanced. It's balanced, see? Balance carried down. This is the balance carried down of the cash book. This is the balance carried down of the debtors account. And now we are done. Zoom out. Okay, now it's clear, right? See? Nothing to it. Simple, simple, simple. That's it. Balanced. Debtors account balanced. Discount allowed account is not balanced, no? You have to balance it. Discount allowed account also should be balanced, no? It's quick. Let's quick balance it. Jumbo size. Now take it this way and balance it. Remember, when balancing income and expense accounts, you don't mention it. You don't mention a balance carried down or balance brought down. Balance brought forward. No, you don't mention a balance carried down or a balance brought forward. Okay, you mention it as that a debit side is the higher side. No, debit side 1,500. Same total in the credit side, so the account is balanced now. And don't mention it as BCD. Should mention in expense accounts and income accounts. This is an expense account. This account is an expense account. Okay. Should mention as income statement or profit or loss statement. The balance carried down without mentioning balance carried down, without mentioning BCD. P&L 1,500. Income accounts and expense accounts. This is an expense account. All right. That's that. Let's move on, shall we? Move on. Before that, I'll minimize this for you. There you go. Right. Can see? Can see? Can see. Can do this now. Next part, or the final part. Fourth, Roman number 4. Following transactions related to the month of January 2016 of Nadira's business. Now, month of January, okay? month of January 2016, Nadira's business, right? What have they given to us? They have given dates and invoice numbers. Buyer. Okay, when you see invoice number, you have to realize that these are invoices. No? Invoices mean source documents. Bills, like receipts and vouchers and invoices. Invoices are source documents issued for purchasing or selling, either for purchases or either for sales. If it is a purchase invoice, that is a purchase. If it is a sales invoice, that is a sales. Credit sales. Credit purchase or credit sales, okay? This here we have buyers in this column and amount in this column. Buyers means they are the buyers. They are buying from us. That means they are the customers. We are selling to them. Which means these are sales invoices, yeah? Sales invoices. Required to prepare the sales journal relevant for the month of January. Told you. It's a sales journal that they ask. Sales journal. Because these are credit sales. Sales invoices are for credit sales. Yeah. Purchase invoices are for credit purchases. Not cash transactions. Invoices are not issued for cash transactions. Okay, let's draw the sales journal. Likewise, date column, buyers column, ledger folio if you want, and the amount column. Well, it's too big, right? The amount column is too big, see? I don't like it. It doesn't look good. Now I'll draw this with more space. Date column, for buyer one column. No, for the buyer or the description one column, and the amount column. If you want the ledger folio column is also okay. If you draw it, it's better. If you don't draw it, it doesn't matter. The ledger folio column, this one, but draw it better. Date column for the buyer, this column, amount column or the value column, ledger page column, ledger folio. Okay, date 7th January. Invoice number. Oh, where's the invoice number column? Oh man, where's the invoice number? Invoice number. There you go. Invoice number. Invoice number 045. Buyer is Anil. 045, buyer is Anil. Amount is 15,500. 15,550. Done. Next, 8th January. 067. 067 is the invoice number. Sunil. Typical names. Anil, Sunil, Ranil. Yeah. Sunil. 17,825. Last transaction 9th January. 089. Kamal. I thought it's gonna be Ranil this time. Anil, Zunil, no, Kamal. 14,850. Done. Sales journal is done. Not yet done, but entered. I mean, invoices, all invoices are entered. 1, 2, 3. Prepare the sales journal relevant for the month of January. This is the sales journal. Okay. And the relevant ledger accounts also must be prepared. Now prepare the ledger accounts. Ledger accounts just like that. We'll prepare the ledger accounts here. Okay. You don't worry about it. I'll manage the space. Like this. How many ledger accounts do we need? How many do we need? 1, 2, 3 for the 3 buyers. Is that it? No. One more account is needed. One more account. There you go. Right. Now, tell me. You tell me. For whom or for what item did I draw the first 3 ledger accounts? 1, 2, 3. First 3 ledger accounts. For the 3 customers, for the 3 buyers. Anil's account. Sunil's account. Sunil's account. Ranil. No. Come on. Kamal's account. Now tell me, why is this ledger account? For what did I draw this ledger account? That is the purchases account. Purchases. Because this is the purchases journal, right? Purchase account. For purchase. No, that is the sales journal we drew here. So for sales journal, you need a sales account. Yeah. Commonly made mistakes. Sales journal should have a sales account. There you go. Done. Now take the entries and enter them to the relevant account. Anil, 7th January, this one, 15,550. Yeah, this one, 15,550 should be entered in Anil's account. Which side? Debit side, because buyers are customers. Customers means they are buying from us. Buying on credit from us. Buying on credit, which means they become debtors. Debtors are debited. 15,550. Description is sales. Mention the date. Mention the date. Okay. Next, Sunil, 8th January, 17,820. Sunil's account. Should go to Sunil's account. 825. Sales. mention the date. Okay. No. It's clear, right? Isn't it clear? 17,825. Clear? Clear. Okay. Next entry is going to Kamal. Kamal's account 14,850. This one, Kamal. 14,850. Sales. Mention there that date also. Got it? Got it. Now let's sum up or take the addition of the sales journal. Let's sum up. I mean, let's take the addition of the sales journal here. How much is it? $15 plus 17,000 plus 14,000. It's 15, 30, 37. 49,220. What is it? How much is it? Zero. It's 0 here. 5 plus 2, 7. 7 plus 5, 2. 5 plus 8. 8 plus 5, 13. 13 plus 8, 21. 22. 5 plus 7, it's 12 plus 4, 16. Remainder, this remainder 2 is added again. It becomes 5 plus 7 becomes 12. 12 plus 4, 16. 18. 1, 2, 3. 48,220. That is the addition of the sales journal. Don't forget to write the description for it. Credited to sales account. Credited to sales account. Don't forget to write this. You will get 1 mark for this. Yeah. If you scribble like, don't scribble. Sales account. Credited to sales account. And it should be credited to sales account. That's it. Yeah. Should be credited to sales account right here. See? $48,220. Are you okay with it? Are you okay? Why are you wondering that? Are you thinking that why it came to the credit side? Why are you wondering? Should be able to understand by now. Debtors are debited 15,550, 17,825, 14,850. Debited. The addition of these three, see, is this. Addition of these three, 1, 2, 3, is 48,220. Should be credited. That's when the double entries get balanced. 1, 2, 3 debit. Total of these three credit. Done. Description is what? Debtors. Mention the date, the last date of the month, 31st January. 31st January. Don't forget to mention here also 31st January date. Finished. It's done. That's how we do the sales journal with the ledger, relevant ledger accounts. Okay. Here you go. That's prettier now, even more prettier now. You can see the entire figure, all the figures. That's it. That's about it. Now this is the fourth part, children. Fourth part. Wait, fourth part. Fourth part of the fifth question, right? Here we have the third part. Yeah. And the second part, make it zoom out, and it's even more prettier now because you can see all the figures, you know, the figures. Zoom out and see all the figures. Beautiful, beautiful, beautiful. And the first part of the fifth question. So we finished the fifth question, the accounting questions. Out of the accounting questions, the first accounting question in the accounting part. Oh, wait. Okay. In the accounting part, out of the accounting questions in the accounting part, this is the first accounting question. This is the 2016 Western Province third term paper. Likewise, we finished one accounting question. The next video, we are going to take on the next accounting question and the next accounting question, and we are going to finish this paper. Do get together and finish it off. Work out. Let's finish this paper. This is the 2016 Western Province third term paper. Until next time, good luck. See you soon.
To watch these important lessons, subscribe to DP Education's YouTube channel right now. Click on the bell icon to stay updated on the latest lessons. Sri Lanka's largest free online school, DP Education.